Good evening. Today is Wednesday, June 2nd. S&P 500 was a little more bullish in the last couple of days. It closed again back up around over 4,200, but it's still stuck in the range. In my view, we've been trading up and down 4,200 for the last 7 days, and I guess the major mover will be the jobs report that's coming up this Friday morning. I don't really know which way we are going to break, whether we break out and go to all new time highs, or we break down and then I guess we will test the likely 4,100 level again. So we'll see what happens Friday. Meanwhile, we're stuck in the boring range, trading today and yesterday mostly above 4190, and closed above 4,200, but been trading up and down 4,200 many times in the last couple of days.
It closed right above this
Volatility.
gamma level,
Right.
that volatility trigger. So it suggests that we could grind higher from here. But of course, jobs report throw it all. There's a lot of speculative positions being built on either side of that, and it's probably going to push the market one way or the other pretty strongly.
Right. And Victor was tweeting that he expects a couple of yellow days, which is basically S&P up and bonds down. But we'll see what happens. And it all, I guess, depends on the jobs report and what the Fed would say, perhaps after, as they want to pass that infrastructure package. Maybe the jobs report is not going to be as good, so that they need the jobs report to be low employment levels to see that there is a need for the infrastructure package to push the economy up.
Let's jump over to crypto really quickly. That we continue to see this right one. Let's start with Bitcoin. That we've continued to see a little bit of a bounce from this level over the weekend, where we broke this support line and we've risen back above it, and pretty much all of crypto has done the same thing. But it's a bit more bearish right now for Bitcoin than it is for some other crypto, some of the other major crypto. But it did rally pretty nicely today, a little bit over 3%. And Ethereum, it's in a little bit more bullish position right now. It's above this 25 level, which was really where kind of support that got broken when it crashed down along with everything else. But it's back above that level, but still more in a neutral place right now. And so what I'm looking at is this 2,900 level, where it got rejected before, and I'd expect to see it to at least try to make at least one more attempt at that level. So with some of the others like Cardano or Polkadot, a little bit more bullish actually. This is a proof of stake coin, and so maybe some of this bullishness reflects that. It could also be there's some dynamics, like people buy one like this because it's a lower price, so to speak, and they don't really look at the supply market cap, but they look at the absolute price. There's a similar thing in stocks like that too. People buy these low price stocks thinking that it could rise faster, but we've continued to see pretty good rally today in some of the decentralized finance coins or tokens, or at least over the last few days. And I think some of these continue to be attractive, like swap or synthetic. Some of these sold off hugely over the last several weeks, and but they're slowly rallying back. We're seeing rallies in names like Curve. That these are some of the biggest DeFi projects, and our Aave, where we've seen big rally. These are some of the biggest DeFi projects, and maybe worth taking a look at. One like Polkadot looks very similar chart, where nice strong rally today, up 16% today, but this one got punished very strongly over the last few weeks. So, so I think that the crypto market, it's all being driven right now by the big names like Bitcoin, where it's still in this sort of still in a hole right now. And if it can rally back to about the 42,000 level and get back above that level, then I would say that the bull case is a pretty strong bull case. It can consolidate in that area without invalidating the bull case, but breaking this support definitively would be pretty bearish for all of crypto, not just Bitcoin.
And another crypto that was rallying today a lot, of course, is our favorite Dogecoin, as Elon Musk tweeted some meme of his old picture and the dog, which is the symbol of Dogecoin. It was up today, what, over 30%?
Well, it says 15, but that could just be a time issue.
Right, depends which.
Pretty really strongly here over the last few days. So. Yeah.
Right, and not to be outdone, our favorite meme stocks are coming back. Who needs Dogecoin when you have AMC? AMC was just the largest traded stock today. It was up today over 95% in one day, and was halted a few times, and it's still trading up after hours. And for the year, I think it's up 2,800% year to date. They have announced some special thing for the retail investors, that you could get free popcorn and exclusive movie screenings. So I guess when the company gives away free stuff and the shorts are squeezed, it's bullish, and it's a good economy. The more money you lose, the higher the stock goes. It was as high as $72 today and as low as $14 last week. So over 400% in a little over a week. It looks like the Wall Street bad boys found a new GME stock and pushing it higher and higher. And GME stock, of course, also was up in sympathy 13% today. And it's still trading in the stratosphere at 280.
Oh, yeah.
GME, which was GameStop stock, which obviously famous in the past, but it's still trading pretty high, regardless of the previous sell-offs. It's obviously way above any kind of reasonable valuation, but it's all about the growth expectations. And I think recently we talked about it. They're building NFT platform for gaming.
I think that this is a great, in my view, this is a lesson, and you could apply it to something like crypto too, highly volatile, where you can actually be bullish on this in the long term. I wouldn't be, but let's just say you are, but it could still, it's much to your advantage to trade something like this in and out, because why would you want to take these drawdowns? I mean, if
right.
Sell on these big rallies, and you don't even have to try to short. It's hard to short sometimes, harder than people think. And so you could sell on these rallies and then buy when it crashes, and then sell on another rally, buy when it pulls back, and you can build up a position that way. And if you're bullish long term, then you're riding the big rips up.
Right. Another meme stock that was up today was BBBY, Best Bet and Beyond, was up 62%. And I'm not sure what's the excuse for that stock, given that it's just a normal store, but
this is a heavily shorted one too, and
right.
it has been for a long time. And I think that was some of the dynamic back here going on at the same time as GameStop. And then today might have been similar trying to squeeze short.
So I guess as S&P 500 is stuck in the range, people are bored and trying to play other meme stocks and squeeze them higher. So hopefully by Friday, S&P would break out and all of these stocks will break down. That's my expectations. Obviously, like Andy said, do not short them because with AMC being a perfect example, yesterday some famous hedge fund guy said that he sold all of his AMC position. And so everybody obviously expected that the squeeze was over. And yet just today alone, AMC traded up 95%, which is insane.
The thing that would rally next, if the Wall Street Bets guys are really pushing these, would be silver, and it did rally today, but it didn't have this kind of a GameStop style rally, which you saw back here, and whenever that was January, February, where they pushed it up a couple, like it looks like about a $4 move, which is huge in the silver market. And considering that
right,
people are highly leveraged in these positions, so if you're short, this could kill you. If you're long, you do really well. You could be levered up 5-to-1 and very easily just with ordinary futures positions. And so that type of move is enormous. But I think a lot of people are watching the silver market right now, as well as gold. But if some of this type of squeeze action continues, then I would expect silver to play, because it's one of the ones that one of their favorites also.
But again, Friday is jobs report, so all of that is also going to be affected.
Absolutely. So one of the one of the ones that I think is interesting here is that, like, the Art Innovation Fund has continued to rally off of its low of a few weeks ago. It's been pausing a little bit. I think this is just the uncertainty about where the market is. Market is in a range, and it's sort of waiting for the next move, but it's up about 12% off its low, so that's a pretty nice move. And Coinbase not quite as, I guess it is a similar move off its low, but it's still down quite a bit from.
But Tesla had a down day, down 3%, which is surprising, and given that the market really is not moving. And
yes, it did.
And Musk is trying to tweet about Dogecoin. He hasn't tweeted about shorts for a while. Maybe he should, because Tesla better not lose that, what is it, 550 or so range.
Right. It's right back down to, which is right back down to 200-day moving average on Tesla, down quite a bit from February high.
Right. And speaking of inflation, if you look at the lumber chart, I think a couple of weeks ago, we were saying that potentially the short-term inflation fears were overblown, and lumber has since been down quite a lot, with today being an up day, but still it's moved, what is it, 30% down or so since?
Yeah, it was a good 30% down. What I read today is that the Biden administration is looking to impose tariffs on Canadian lumber, which I don't know how
why
dynamics of the market itself, whether the degree to which it affects it, but that the supply could be further constrained in the U.S. as a result of those tariffs.
Did it say why they're doing this?
It's always a protectionist move to protect these that the lumber industry is sort of pinched because of this, because a lot of the lumber producers they're hedged, and they've sold forward at much lower prices, so they're actually more pinched it may seem, despite these high prices.
Meanwhile, oil also just made recent highs at $69, as Biden administration is canceling some leases that Trump administration allowed to drill. Now Biden is canceling the drilling sites. And given that the oil is going up and consumer unemployment, various benefits are going to be canceled pretty soon in many states, they already are, it looks like between the less money coming in and higher gas prices at the pump, at least temporarily, the consumer could be squeezed a little bit. So economically, next couple of reports maybe not as good as on the consumer front.
So that's it for me, but I think that I think that the market's going to be anticipating this jobs report, especially with cyclical stocks, and we're seeing maybe some sell-offs in some of the cyclical names today. Just some slight sell-offs, nothing that would threaten the bullishness of them. But my view is that they're waiting for some direction from the market, but they're all trading very near highs, and so depending on how negative it's widely anticipated that this jobs report will be pretty negative. If it ends up being less negative than it's expected to be, then it could push both the market as well as a lot of these stocks through their recent highs. But if that doesn't happen, then it likely will be a more sideways movement at best.
Thank you, Andy, and we will see you all Friday.